In today's video, I am going to be sharing with you my best trading strategy on gold, XAUUSD. So in this video, you are going to learn how I place my trade and the confirmations or the confluences that I look into before I place my trade. Like I told you in my previous videos, gold is highly volatile, and that is why it is always trending. So beginners traders find it difficult to trade gold because of the high volatility in gold market. But if you are a beginner and you want to master gold, you are in the right channel, because in this video I'm going to simplify gold trading strategy for you guys to understand. I'm going to break it down how I trade this strategy profitably. So the advice I will give to you guys is to pay clear attention and watch this video from the beginning to the end, so that you will understand how I trade the gold strategy. And once you are able to master this strategy, you are going to be able to grow your small account. You can grow your $100 account to over $10,000, and you can grow your $1,000 account to even more than $50,000 once you master this strategy and have it at the back of your mind that this strategy has been back tested and has been proven to work. So make sure you pay clear attention so that you will understand what this strategy is talking about. So for the sake of this video, I'm going to use the MT5 desktop platform for the analysis. The reason why I prefer using MT5 for my personal trading analysis is because sometimes the price chart on TradingView and that of my broker might not have the exact number, the exact price number. For instance, if I go to TradingView and analyze the market, right, if I come to my broker, and you see that there's some gap, right? So but for me to get an exact strategy and exact entry, that is why I normally use my broker's MT5, so that once I analyze it, I will place the trade from the same platform, so that it will give me the exact thing that I need. So that is for me, personally for me. But sometimes I do analyze using TradingView. So for this tutorial video, I'm going to use the MT5 desktop platform for my trading analysis. So pay clear attention so that you understand everything in this video. So this is the MT5 trading platform, and you can see I'm trading gold, XAUUSD. Now I am a day trader and also a scalper, right? I'm a day trader and also a scalper. I'm not a swing trader. Sometimes I can be, but I am full-time day trader and scalper. So now, for you to be able to trade gold profitably, you need to trade in the direction of the trend, because gold is always trending. Gold is always trending, either trending up or trending down. So before I start trading, I need just one indicator, right? One indicator and price action. So I don't use any other indicator except one, and that is the moving average. So the moving average is the only indicator that I use in all my trading, alongside with price action, because I'm a price action expert. So the reason why I'm using the moving average is to help me, to stand as a guide, to tell me the direction that the market is moving. And I also use multiple time frame for confirmation of trend. But most importantly, I take my trades from the 15-minute time frame, which is the best time frame for intraday traders. So if you look at the chart here, you will see that the market is currently going up from this point. From this point, the market is going up from this point, right? The market is going up from this point. So what I normally do is to plot out the moving average, right? So for you to be able to plot out the moving average, you simply go to indicator, and then you can plot it out. You go to indicator, this is the moving average, click on it, and then you do the settings, the parameter, you set it to 50 period, exponential moving average, and then you change the color. That is it. So for the fact that I've already plotted the moving average, you can see it, this yellow line is a moving average. So this is the 20 exponential moving average. I use one moving average for my trading strategy. So I use the moving average to help me as a guide, to tell me the direction that the market is going, right? So whenever the price is consistently above the moving average, I will conclude that the market is in an uptrend. And whenever the market is consistently below the moving average, I will know that the market is in a downtrend, because sometimes gold doesn't make higher high and higher low. So if I'm waiting for higher high and higher low, gold most of the time doesn't make higher high and higher low. So most of the pairs that makes that is currency pair. And like I told you, gold is always in a parabolic move. Like gold is moving like rocket, it's just moving with force without any stopping, without pullback. So gold is like, I don't know, it's like a rocket moving straight. So that is why most of the time gold hardly make what higher high and higher low. It's just going up up up, and if it's going down, it's going down 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 down. If it's going up, it's going up up up. So that is why I use the moving average as a guide, because if I say I want to rely on price action way that of identify trade, because the way price action traders normally use to identify trade is when the market is making higher high and higher low. But for gold most of the time hardly makes higher high and higher low. So most of the time gold will just be going up up up. Even if it wants to make a pullback, sometimes the pullback are very very small. So that is why I prefer the moving average as a guide. So I have 3 periods that I use. Like I told you, I use only one moving average, but I change the periods, right, depending on the one the market is respecting. So I use the 20 EMA moving average, I use the 50 EMA, and I use the 200. So I use the 20 for a strong trend. Like if the market is in a parabolic move, in a strong trend, I use the 20 moving average. But if the market is in a healthy trend, I use the 50 moving average. And if the market is in a weak trend, I cannot use the 200 moving average or the horizontal support and resistance level, right? But I don't normally use only the moving average. I combine it with price action, like I told you. So what are my tools for my price action tools? That is the trend line and the horizontal line. So I use the horizontal line to map the levels when the market is in a range, and I use the trend line to map levels when the market is trending, either uptrend or downtrend. So from here, you see that the market previously was going down. From here, the market was going down. So when the market got to this point, the market now retraced up, right, and then began to go up. So now, for the fact that this is the highest point that the market got to, I had to draw a level there. So I draw my horizontal level there, because I believe this is the level that the market can reverse from. If the market gets to this level, the market will reverse from this level. So that is why I drew this horizontal line here, right? So I'm waiting for the price to come here for me to take my sell trade, right? So you can clearly see the market rally down all the way to this point, right? So now you can clearly see the power of the moving average. Now, for the fact that the market is consistently below the moving average from this point, I can clearly say the market is going down. So I'm only looking to sell, right? So for the sake of this, I will have to draw a trend line for me to be 100% sure that the market is going down. So I'll draw a trend line. So I will draw a trend line for me to confirm that the market is going down. So now the trend line is holding onto the market, because in this scenario, the market is just crossing up and down, right? The moving average in this scenario is not holding the market, because this is a 20 EMA. This yellow line, let me change the color of the trend line so that you don't get confused. Let me change it to white. All right. So this yellow line is the 20 EMA. So you can clearly see that it is just from this point to this point that the price is respecting the 20 EMA. Apart from that, the price is not respecting the 20 EMA. So you see the price goes down, goes up, goes down, goes up, goes down, but the market condition is downtrend. And that is why I said I combine moving average with trend line price action. So now I've drawn the trend line to connect the highs, right? So each time price comes to the trend line, I take what? A sell trade, right? Each time price comes to the trend line, I'll take what? A sell trade. So now as I've drawn the trend line, there is something I noticed, because from here the market was going down, right? So you can clearly see that from here the market was going down, right? The market was going down, making a series of lower high and lower low, lower high and lower low. So now each time the price makes a pullback to the trend line, the price get rejected. Each time price makes a pullback to the trend line, the price get rejected. You can see it makes another pullback to the trend line, then got rejected, make another pullback to the trend line, and then got rejected, right? So here the market was making series of lower high and lower low, right? And when the market got to this low, to this point, when the market got to this point, the market began to make higher high and higher low, right? You can clearly see that as the market got to this point, it now made another retracement to the trend line, right? And this time around the price could not break below this previous low, rather the price makes a lower high. So this is the lower high. So you can clearly see that this is a new lower high. So now previously the market was making lower low and lower high, right? Lower low and lower high, lower low and lower high, lower low and lower high, right? So from here the market now begins to make higher high and higher low, right? You can, from here now you can clearly see that the trend of the market have changed, right? The trend of the market have changed. So for the fact that I was selling from here, right, each time price comes to the trend line, I take a sell trade. Each time price comes to the trend line, I take a sell trade, and each time price comes to the trend line, I take a sell trade. What I'm waiting is for this trend line to be broken, right? I'm waiting for the trend line to be broken before I can change. As long as price is respecting this trend line, I'm still taking a sell trade, right? As long as price is respecting this trend line, I'm still taking a sell trade, right? So you can see that I'm clearly trading on the 15-minute time frame. This is the 15-minute time frame, right? As a day trader, I'm clearly trading on the 15-minute time frame. So each time price makes a pullback to the trend line, I'll take a sell trade, right? Each time price makes a pullback to the trend line, I'll take a sell trade. So in this scenario, you can clearly see that the price is not truly respecting the moving average in this scenario. From this point to this point, the price is not respecting the moving average. That is why I can never ever recommend you guys to trade the moving average alone, right? You don't use the moving average alone, right? Because sometimes price doesn't respect it. Like I told you, have different moving averages, right? So if the price is not respecting the 20 exponential moving average, you cannot try the 50, right? Price might be respecting the 50, and if price is not respecting the 50, you can try the 200. So that is why if you don't have the time of changing the period, you can use a trend line. What you need to do is just to connect the highs. Like you can clearly see that this is where the price gets to and get rejected. This is where the price gets to and get rejected, and this is where the price gets to and get rejected. So you simply use a trend line and connect the highs, because you know fully well that is where the price always reverse. But if you are trading off crossover, right, as your trading strategy, you will know fully well that the trend line is a point where you are expected to take your profit, right? If you take a buy trade at the crossover, you know you have to take your profit when the price gets to the trend line, because you know that is where the price is reversing from. That one is for scalpers, right? Those that are taking profit immediately, for scalpers. So it's only scalpers that can trade crossover with this type of market, only scalpers. But if you are a day trader, you have to be looking for entry at the trend line, because you want to cash more pips. So from the trend line, you'll be able to cash more pips, because if you check, you see that from the trend line, the movement is very long, right? You can see the movement. So from the trend line, you can see the number of pips you can be able to gain. So if you check now, you see that from this trend line, see what you're going to gain. From this trend line to here, you can see where the market reached. So you see that you get enough pips. So if you check it again from this trend line again, you can see it again. You see what you are able to get. So if you can sell from this trend line, you will get more pips, right? If If you can sell from this trend line, you get more pips. So that is what I'm talking about. So I'm only looking for price to break above the trend line for me to confirm that the trend have actually changed direction. As long as the price is still respecting the trend line, I'm still selling, right? I'm not taking my trade from the moving average. I'm only taking my trade from the trend line, because in this scenario, price is not respecting the 20 EMA. But if we change the 20 EMA to 50, let's do that and see whether if price is respecting the 20 EMA. So what we'll do, we'll still go back to the indicator, and then we change the setting to 50, right? So now that we have changed the setting to 50, what happened? You can see that the market is still not respecting the 50 EMA. This looks like the market is in a weak trend, right? You can clearly see that the price is still crossing the moving average consistently. So in this scenario, we can say that the market is still not respecting the 50 EMA. So let's now change it to the 200 EMA and see whether if the price is respecting the 200 EMA. Now you can clearly see that the price is far away from the 200 EMA. So technically the 200 EMA is not an option in this scenario. The price is far away from the 200 EMA. So let's now change it to 100 EMA and see how far, whether if the 100 EMA will hold on to the price. Confirm. Now you can clearly see that the 100 EMA is very close compared to the 200 EMA, right? The 100 EMA is very close compared to the 200 EMA, but the best thing you can do in this scenario is to use the trend line, right? Because the 100 EMA is still far from the price. The price is still far from the 100 EMA, right? So if you're waiting for the price to get to the 100 EMA, it will take time. So that is why you still prefer, that is why we still prefer the trend line in this scenario. So we'll go back and change our moving average to 20 EMA, and we'll look at the trend line as our guide for now. So for now, the trend line is what we are looking at, right? So you understand what I'm talking about. If the price is not respecting any of the periods on any of the moving average period, the trend line should be your last resort, right? So you can see that the price is not respecting the 20 EMA, price is not respecting the 50 EMA, price is not respecting the 200 EMA, right? And we added 100, price is still not respecting the 100 because price is far away from the 100. So in this scenario, we'll clearly say the trend line is our guide. So we'll take our trade from the trend line, right? So this time around, we're going to disregard the moving average, right, and focus on the trend line, because that is where price is receiving resistance. So when price comes to the trend line, we take a sell trade. When price comes to the trend line, we take a sell trade, right? And our stop loss will always be above the trend line. Now, if the trend line is eventually broken, that tells us that the trend have now shifted from a downtrend to an uptrend, because from here the market was clearly going down. That is why the market was receiving resistance at the trend line. So when the market eventually breaks above the trend line, this now gives us a confirmation that a trend have changed from a downtrend to an uptrend. So here the market made two lows, right, but the lows are not equal, right? So from here you can clearly see that the market have changed its trend, right? The market have changed its trend. So now instead of getting lower high and lower low, we are now getting higher high and higher low, right? So this is the higher high, right? This is the higher high and this is the higher low. So if you watch, you see that the lows are not the same. You see that the lows are not the same. You can clearly see from here they are not equal, right? You can clearly see that the lows are not equal. So you can see the lows are not equal. You can clearly see it. The lows are not equal. So you can see the price makes a low here, then makes a higher high here, and then make a higher low. So this low is not equal with this low, right? So you can clearly see that the price is now heading up. So that is why we use our trend line to connect the lows. You can see the trend line we use to connect the lows and then extend it to the future, right? So we use the trend line to connect the lows and extend it to the future. So whenever price comes to the trend line, we cannot take a buy trade. until the price breaks below the trend line. So as the price breaks above the trend line, this is where the price breaks above the trend line, we can now confirm that a new uptrend has begun. So we are waiting patiently for the price to come and retest this trend line for us to take our buy trade. So you can clearly see that the price now made a pullback to the trend line, retested the trend line, and then continue heading up. So you see that this time around the price was unable to come back to this trend. So you can see in this scenario the price is unable to come back to this trend line, but we can still leave it, right? Because this can be an area of value if the market is still respecting it, unless if the market has broken below it. So that is why we still left this trend line. So now the price now found support at this trend line, which was previously acting as what? As a resistance level. So after testing the trend line, the market now began to head up, right? The market now began to go up. So you can clearly see again that the 20 EMA in this scenario is still not respecting the price, right? But I think this time around the market is in a healthy trend. So if you watch, you see that the market is still not respecting the 20 EMA. The price is still not respecting the 20. That is why the price is going up and going down. Price is just going down and going up, going down and going up. So the price is crossing the 20 EMA back and forth. So this time around we change the period of the 20 EMA to see whether if the price will respect the 50. So we'll not change it to 50 EMA to see. So now we can clearly see that the price is respecting the 50 EMA, right? So you see that as the price break above the trend line, the price could rally all the way to this top, right, which is the previous resistance level. So you can see this is the resistance level that we draw. So the price still went up to test the resistance level. So this is it. You can clearly see that this is where we draw the resistance level. The price came up here and tested the resistance level and then collapsed down, only to receive support from the trend line and the moving average. So you can see that the price break a little bit below the 50 exponential moving average and then receive support from the trend line. The trend line that was previously acting as a resistance level has now started acting as what? As a support level. So as the price received support from the trend line, the price now rallied up. As the price rallied up, the price refused to come back again to this trend line. In this scenario, we will not be looking at this trend line again. Rather, we are looking to draw a new trend line because this trend line is far away from the price. So we will now draw a new trend line from this low. So the price now went all the way to this point, tested this resistance level again for the third time, and then collapsed down, only to receive support from the 50 exponential moving average, this yellow line, right? So as the price receives support from this exponential moving average, this 50 EMA, that is when we can now apply our second trend line. So that is when we apply the second trend line. We connect this low, and then we extended it to the future, right? In case if the price stop respecting the 50 EMA, we can now use the trend line as our last resort, so that if price eventually breaks the trend line, we will now conclude that the trend have changed again. So for the fact that the market is still respecting the 50 EMA, we are taking our trade at the 50 EMA, right? So if the price breaks below the 50 EMA, it tends to receive support from the trend line. So you can clearly see from here, the price was respecting the 50 EMA. Each time price comes to the 50 EMA, it tends to receive support. Each time price comes to the 50 EMA, it tends to receive support. And here, price eventually breaks a little bit below the 50 EMA, and then the trend line became the last resort. So the price received support from the trend line and then rallied up. So in this scenario, the price has eventually broken this resistance level. So you can see that this resistance level has been broken, right? The price broke above this resistance level, right? And what happened? The price came back and tested this resistance level that was broken, right? And you can clearly see that the moving average is acting as a dynamic resistance and support level. But for the fact here that the market is in an uptrend, the moving average is acting as a dynamic support level. That is why the moving average is going along with the price. If the price is going up, the moving average is going along with the price. So if you watch, you see that this resistance level was acting as, this line was acting as a resistance level previously, and right now as the price breaks above it, it began to act as a support level. So as the price breaks above this resistance level, rallied all the way to this point, and then came back to test this resistance level, this color, this line. Now you can see that as the price respected this resistance level, which has become a support level, the price also respected this 50 EMA, and the price also respected this trend line. So we have three confirmation. We have the horizontal resistance level that has become a support level, we have the 50 EMA, and we have the trend line. So we have three confirmations. So this tells us that this is clearly an area of value in the market. This is clearly an area of value. You can just call it a zone. So this is clearly a zone where you are expected to take a buy trade, right? So had it been the price came to this moving average and form a bullish reversal candlestick pattern like the hammer, that is when you can take a buy trade. Or had it been the price came to this moving average and then formed what, a morning star, right, or a bullish engulfing pattern, that is when you can take a buy trade. But for the fact that the price is just consistently going down, you can see series of red, that means there's a strong selling momentum in this market, because there are so many red, right? Even as the price got to the moving average, there was no single green. The market is just going down, red. So that should tell you that there's a selling pressure. So if you are not sure, you can still exercise patience to see what will happen, because in this scenario I was waiting for a green to form, not just a green to form. I was waiting to see a bullish reversal candlestick pattern, right, for me to confirm that this moving average is still holding onto the price. But you can clearly see, to my greatest surprise, the price breaks below the moving average. Now I say, okay, let's see what will happen when the price gets to the trend line. Let's see whether if the price is going to form what, a bullish reversal pattern. But what happened, the price came to the trend line and broke below the trend line. So the price broke below the moving average. We're still hoping that when the price gets to the trend line, it's going to form what, a bullish reversal candlestick pattern. And what happened, as the price gets to the trend line, the price still broke below the trend line, right? The price still broke below the trend line and still forming the same candle, red. So with this, you don't need a prophet to tell you that there's a strong selling pressure in the market, right? The sellers have taken over because the price has broken our first level, which is the support level, the moving average, right? And it has broken our second level, which is the trend line. So our last level is this support level, this previous resistance turn support. So this is our last level. So if the price eventually breaks below this level, we are taking a sell trade, because the price has broken our three levels, right, signaling to us that the sellers have taken over the market. So this previous resistance turn support will be our last resort. So you can clearly see that the price now breaks below the previous resistance level turn support. So the price breaks below this support level. So this now gives us the confirmation that the market is clearly in a downtrend. Just look at this movement. This is what we call a strong bearish momentum, right? Look at this movement. Look at this movement. Look at this movement. This is what we call a strong bearish momentum. The sellers are in control of the market. That is why the market is going down. That is why you can see the strong bearish momentum here. The market is going down. So for the fact that the market has broken below our three key levels, we are taking a sell trade. So we simply wait for this red candle that broke below this level to close, and as the candle closes, we cannot take our sell trade, right? We can simply take our sell trade here, right? Our sell trade, we take our sell trade at the close of this red candle. This time around, not above this resistance, because the resistance level is far away. It's very far away from us. We need a tighter stop loss, right? That is why we are not considering our stop loss to be above this previous resistance level, because it's not far away from the market. So our stop loss should be above the moving average, right? So this will be our stop loss above the moving average. right? That will be our stop loss. So now we can now ride this trend, right? So if we want to have a fixed take profit, our take profit should be at the previous support level. So which is this is the level that the price reversed from, right? So this is it. This is our previous support level. So that is where we can take our profit. If we want to have a fixed take profit, that is where we can take our profit. But if we want to ride a trend, like trend followers, if we want to ride this trend, we can only take our profit when the price crosses above the moving average. So if the price eventually crosses above this 50 exponential moving average, that is when we are expected to take our profit. That tells us a change of trend. But for the fact that the price is still below this 50 EMA, we are holding on to the trade. So now you can clearly see that as we took our sell trade here, the price collapsed down. You can see the price is still going down, right? So now the price have not changed from a healthy trend, because here the price was in a healthy trend. You can see that the 50 EMA is holding onto the price, which tells us that the price is in a healthy trend. So now the price has now changed into what? A strong trend. So you can now see that the price is far away from the 50 EMA because the price is in a strong trend. This is for new traders that want to enter the market, because new traders will be saying, where do I enter? Now that the price has collapsed down, where do I enter? Right, my sell trade, because you need to enter your trade at an area of value. So you see that now the 50 EMA is very far away from the price, right? So you cannot be saying, okay, let's wait for the price to come to the 50 EMA for you to take your sell trade, because you wait and you get tired of waiting. So you can see that since the price breaks below the 50 EMA, the price has not retraced back to the 50 EMA. So you can see that the market is clearly in a strong downtrend. So in this scenario, what I will do is to just change this moving average period from 50 to 20 to a strong moving average period. So we'll not go to chart and we'll go to indicator, and then we'll not change it to 20 to see what will happen. Confirm. So now we have changed it to 20. What happened? You can see that the price is now very, very close to the 20 EMA. So in this scenario, the 20 EMA is now acting as a resistance level, right? So you can see that the price rallied all the way to this point. The price rallied all the way to this point and then came back to test the 20 EMA before the price collapsed down. So this now becomes an area of value where you are expected to place a sell trade. If you are entering the market at this moment, this is where you are expected to place a sell trade, right, at the 20 EMA, right? So you can see that the price got to the 20 EMA, it collapsed down. So if you're able to take a sell trade at this 20 EMA, you'll be able to cash this move. You can see the move. You can see how the move is. Look at, just imagine how the move is. Imagine, look at. You can clearly see the move. So the movement is very, very massive. So let's assume you took a sell trade when the price rallied to this 20 EMA, because if you see that as the price got to this 20 EMA, the price made what, a little consolidation before it collapsed down. So you can see the consolidation here. This is the consolidation that the price made, right? It went to this low, went up, come down, went up again before it collapsed down. So as for the fact that the price has retraced to the 20 EMA, that is where you are expected to take a sell trade. So you can simply take a sell trade as the price came close or touches the 20 EMA, which is somewhere here. You can take a sell trade here, and then your stop loss can be somewhere here. Let's remove this. Then your stop loss can be somewhere here above the 20 EMA. There can be your stop loss above the 20 EMA. Then you cannot be able to ride this massive trend. You can see how deep the market is going. So that is why I told you gold is very, very volatile. Don't ever try to trade against the gold market. Since I've been trading, I've tried as much as possible to trade in the direction of the trend, because if you go to the higher time frame, you will see that there are so many support levels that the market is breaking. Because if gold begin to move, it will be breaking so many levels. Now that the gold is in a strong downtrend, it's breaking so many support levels. So if you are waiting to buy from a support level, let's say you go to a higher time frame like the 4 hour or 1 hour, and you saw a support level, and you say, okay, let me take a buy trade at that support level. To your greatest disappointment, gold can just make a little retracement, and you think that it's going in your favor. Before you know it, it will just reverse, and boom! And if gold is moving like, I don't know, if it's going down, it's going as when a jet or a rocket is going down. If it's going up, it's going like when a rocket is going up. It's going down, it's going up. That is gold. So if you are trading against the trend in gold, you will get so many losses, because market will just be hitting you back to back. So that is why I take our time to explain this to you guys. How I trade. This is the easiest way I trade gold, right? This is the simplest way I trade gold. So you can take a sell trade here, your stop loss above here, and then you can ride this trend, right? You can see that the market collapsed all the way to this point. This is the point that the market got to. So now what happened again? The market now made a retracement again to the same 20 EMA. So this time around, you can confirm to me that the 20 EMA is now acting as a resistance level, an area of value. So here the market is acting as a resistance level. So the price now rallied all the way to this point and then made a retracement to the 20 EMA, right? So you can still bring out your trend line and then connect the highs, right? So you can clearly see that the market is now respecting this level, right? You can see that this is the 20 EMA, and then the market is respecting it as a resistance level. So new sellers can still take sell trade here. So remember the sellers that took their sell trade here. Remember the sellers that took their sell trade here. Some are still holding onto that trade, right? Some are still holding onto that trade, right? The seller that took their sell trade here, some are still holding on to that. So imagine if you do the calculation, imagine how many pips you are going to make from entering your sell trade from here, and then imagine how many pips you will make if the market rallied down to this point, right? For those that are still taking their sell trade. So you can clearly see that the market has not yet broken above the moving average. It is getting rejected. If it breaks, it gets rejected. The market needs to break and close, right? All the bodies will close above this moving average before you can confirm that the trend have changed. So the price needs to break above this moving average and closes above it. But you can see that the price breaks, get rejected, forming this wick, goes up again, get rejected, goes up again. So you see that in this scenario, the buyers are finding it difficult to push the price up. So that is why the price is getting rejected at this resistance level. So this is the level where sellers are expected to take their sell trade until this level is broken. So this is the level that sellers are expecting to take their sell trade. So if price now eventually breaks above this level, if price eventually breaks above this level, if price breaks above this level, then we cannot take a buy trade from here, right? So if price breaks above this level, we cannot take a buy trade from here. But as long as this level is still intact, we are taking a sell trade. So sellers are still in control of the market. They are still pushing the price down. That is why the price is not able to break above this level. So you can see that the 20 EMA is now acting as a resistance level. So with this horizontal level, you can say that you now have two confirmation, right? The price is respecting this horizontal level and still respecting the moving average. So here we have double confirmation. So this is where you are expected to take a sell trade. This is where you're expected to take a sell trade unless the price breaks above this level. So this is how I trade gold, and this is how I consistently make profit on gold. So with this analysis, you understand this is the exact way I trade gold. I don't trade against it. I trade in the direction of the trend. If the trend is going up, I'm going up. If the trend is going down, I'm going down, right? So that is how I trade gold. right? So I believe you have learned a lot from this video. So this is how I trade gold, XAUUSD. You have seen how I've simplified my trading strategy for every one of you to understand how I trade gold. So the only thing I need from you guys is to subscribe to this channel, turn on the notification icon to be notified whenever I publish new content, and also don't forget to share this video so that others will learn from this video. Thank you once again for taking out your time to watch this video. I will see you again in my next update. Enjoy the rest of your day.